Hey guys, Steve from theturtlefollower.com with the strategy session for Wednesday, September 10th. Today the market basically went sideways once again. We talked about this for the past week or so. The S&P 500 is essentially moving sideways. Today it looked like, again, we were going to get some more continuation out of the bottom of this consolidation. And instead, towards the end of the day, we rallied higher and closed back within the box. All right, so right now we're really just moving sideways. The market is not giving us any indication as to which way we're eventually going to break, if it's going to be to the downside or a breakout higher. Looking at the chart, I do think that, and this is also what we talked about in the stock market outlook, that we need to move sideways, consolidate, digest those gains that we had off the bottom back here from the beginning of August, and then set up the next move higher. I think at this point, the longer we move sideways, the longer we allow this 50-day moving average to catch up, the better situated we're going to be for continued move into the year's end. As far as the Nasdaq goes, similar case here. All right, this one instead, we had a breakout. We had a breakdown yesterday. We tried to break out, closed back towards the lows with the news out of Apple. Today, reversed all of those gains essentially and is sitting right back below resistance of this consolidation. All right, so this one's coming closer to this trend line. We can redraw this trend line a little more accurately to take into account this low back here. But again, the longer we go sideways and allow this 50-day moving average to catch up, I think the better off we're going to be. If we go ahead now and break out, I would just be a little bit skeptical, and I think there may be a lot of people that turn around and sell into that strength. So, the better setup would be to consolidate longer. And the Dow is also in the same type of consolidation. This one trying to break out from this high back here through the middle of July. But right now, again, it looked like we were going to break down today and instead close back in the middle of the range, reinforcing the bottom of this box. So as far as the markets go, really not much clue as to which way we're going to lean here. I think it's more of a wait and see mode. And I think we're at a point where, if we did break out, that we would probably see some selling into strength on that. So, just take your trades based on your setups and kind of leave the market to do what it's going to do. All right, let's go through our positions. We'll go through them in order of biggest gain to biggest loser. So yesterday, we talked about how Apple looked like it was going to sell off, all right, almost breaking that 50-day moving average, closed back right inside the channel. And of course, today we had a nice move higher, up 3%. So what we can do now is we can start to see where our next stop level is going to be, all right? And I've talked about this in the past, but we have these pullbacks that nobody ever wants to sit through. But what happens for us is it actually identifies areas for new stops, new trailing stops. So what I'm going to start doing is putting those new trailing stops in blue. And this way we can see where we would be moving our stop to, instead of me just showing an area. So 98.04 would be the next stop that we'd be moving to, and that would essentially take into account the bounce off of this lower channel line, and eventually once the 50-day moving average is above 98.04, then we'll be setting our stop at 98.04. Right now, stop is still 94.29. LUV, this one's been on a tear since we entered. Right, we entered back here on the 14th on this breakout bar here, and we've had a nice. The trigger was on the 14th. We entered on the 15th because we used the closing prices, so we entered the next morning. So the open price was $29.88. We're now sitting at $33.62. So we're talking about almost a 15% gain already. So this one right now, our stop is here, $29.38. The 50-day moving average is now above that level, and you can see that the trend line is still down here, but I think we're starting to put in a more accelerated trend here, and can potentially redraw some trend lines above the 50-day moving average. So right now, Southwest, just let it work. It's doing great. You're getting a 0.71% dividend, which isn't the best, but you are still getting a dividend just to wait and watch the stock price appreciate. Next one was Expedia. Expedia, we talked about it breaking this channel, or I'm sorry, this trend line here. It's still well within the channel, but as you can see, we're getting to a point where we're identifying the bottom of this consolidation here at 85.75, and let's see what happens. If Expedia can consolidate, allow that moving average to exceed 85.75, then 85.75 would become our new stop. So you can see how these consolidations and pullbacks are really helping us in identifying new stop levels, managing our risk, and allowing us to take some risk off the table. So these are essentially, it's a necessary part of trading. As much as you don't want to sit through it, you also need to know where you're able to move stops to based on actual price action and not just arbitrary movement. All right, APD. If you missed the strategy session yesterday, I came in and the first thing I think we talked about, or one of the first things, was how APD did close down, but the difference was I went back and looked at my charts from a longer term chart, and we originally had a trend line drawn on a steeper angle. I went back and looked at the trend line, and sure enough, we came right into trend line support. All right, so this was a mistake I made in the win video. So if you're not familiar with it, definitely go check out the Anatomy of a Stock Trade. WYN was the symbol. We got stopped out on the trade. Sure enough, it turned around, rallied against us, and we basically were stopped out at the bottom, primarily because when I drew the trend lines, I wasn't looking at the longer term. I was looking too short term. What I did here with APD is we had adjusted our stop to 131. In yesterday's video, I decided that was not accurate, and I changed it to 128.65. So 128.65 is our current stop in APD, and you can see today that we had a 1.15% gain, still below the 50-day moving average, which is concerning, but at least at this point we know we're kind of at a bounce point, and hopefully now we can rally through the 50-day, rally through this downtrend line, put in a higher low. Essentially, yes, a higher low would be here, and break through this 134 level. If that's the case, then our next stop level would move up slightly to 129.95. GD up 0.92%. This one keeps working. All right, our next stop level in GD is going to be right here. At 122.69. All right, but you guys know from watching, what do we have to wait for that to happen? We have to wait, especially with GD, because we have no other reference as far as trend line support, but we have to wait for either this 50-day moving average to exceed 122.69, or let us put in a trend line that maybe, obviously this wouldn't be an accurate trend line, or at least one that the stock would be able to sustain for long. But we need to figure out where that next trend line is. I don't know if it's necessarily down here, but for right now, I think 122.69 could become our next stop level, but we have to give it some time to allow at least the 50-day moving average to exceed that level. Fidelity, this is another one. We moved our stop recently to 56.40. All right, I think we can come up and potentially, let's see what happens now. We broke out. Let's see what happens. We have this more accelerated trend line. We're coming back into it, bouncing. Let's see if we can move higher, or if we consolidate, allow that 50-day to move higher. There's a lot of different things that can happen, but 56.40 is a good stop level for us right now. ADM up 0.42%. This one just continues to work. Next stop level I see would be here. Let's get the right tool for the right job. Here at 49.18, but again, let's wait for that 50-day moving average to exceed 49.18, and you can see what I'm doing. I'm using these reference points, these lows, as potential stop areas. All right, I'm not trying to predict where they are. I'm using specific price action and letting the stock tell me where the stop should go. So again, next stop level here would be 49.18. Again, waiting for that 50-day moving average. RSG up 0.13%. This one, after the breakout, is just moving sideways. All right, we're putting in this consolidation. And again, this is something that I think the longer it goes sideways, the better we're positioned for a sustained move to the long side. I think if we can come sideways, maybe into this 39 area, and we move into, like, say, the middle of September, 50-day moving average is now all of a sudden maybe up here. Trend line is there, and then we bounce over and break out above 39.50. We got a great tight stop, a breakout over 39.50, and we're sitting pretty at that point. But a lot of things have to happen from now till then. I think our next stop level, we'll see what happens in the next few days, would become that 38.11, being the top of this previous consolidation that we entered on. H&R block, basically flat for the day, or it was flat for the day. And, right now that 32 level's holding. So let's see if it continues to hold. We had a significant downward move in the stock. Let's see what kind of bounce we get. If we only get a little bounce, you can see what's happening now is the 50-day moving average is kind of curling over, similar to what it did here. All right. So let's see. I think if it bounces and comes up to this 32.75, and then we turn around and break 32, happily take the exit on the trade. Small losers, big winners. That's the name of the game here. All right, Disney came down. All right, broke obviously the bottom of this small consolidation we were in. Came down, but look at where it's coming into, the 50-day and trendline support. Stop right now is 87.30. I think let's see what happens here. Maybe we bounce off of this trend line, which is perfectly fine. Maybe this was the bounce and we move higher today, tomorrow, and eventually break out over 91. If that's the case, then the new stop level would be at these lows of 88.70. Let me just draw that in. Let's see, we probably might have to move this one around, but 88.70 there. AMT down 1.1%. Again, talked about this before. Remove that. Remove this. Activate this. All right, let's clean this one up a little bit. So 94.23 is our current stop. I think our next stop level potentially becomes 96.61. What would we need to see for that to happen? First, we would need to see a breakout over 100. Second, we would want to see the 50-day moving average over 96.61 and trend line to hold. All right, so if this comes back, hits trend line here, bounces higher, that's the first sign. Second sign would be that the 50-day moving average is now over 96.61. And the third, and ultimately trigger to move our stop, would be a breakout over $100. Right now, down 1.1%. Dividend coming out, looks like the middle of September. Tesoro down 2.87%. All right, so this one looked a little nasty today. But sure enough, what happened? Tesoro came right back in to trendline support, bounced almost to the penny off the 50-day moving average, almost to the penny off of our stop level. All right, so this is a good stop placement. I'm not sure what happened with the stock that made it, go from 66 to 62 or 63, but it's just part of the game. You don't have to know. Fact is, you just have to manage your risk. So at this point, let's see what happens. If we get a bounce off of here, then obviously we know our stop is in a good position. And let's see, then maybe it consolidates a little longer and allows us to move a stop to a new level. Right now, 61.77 is the only level that I see that we could be using. And the last one, EQR, down 3.8%. All right, so this was a tough one. This one looks like we may be getting stopped out shortly. But what happened is broke the 50-day, broke the trend line or the channel line. Okay, that's been intact since all the way back here from the beginning of, beginning of 2014. All right, so those two lines broke. Probably huge volume on this one. Look at the weekly chart. We're right at trend line support on the weekly chart. And we're below these lows again, these highs from June and July of 2013. All right, 2012. So this one definitely looks like it's a little bit broken. We still needed to break our previous low, which was 64.08. So if we break 64.08, gladly take an exit and move along I don't foresee any place that we could have moved stop to. We couldn't move it up here to 66, only for the reason that the 50-day moving average wasn't above that level. So as long as we're following our plan, we'll let the cards fall where they are, and just trade each position on its own merit. And if we get stopped out, we get stopped out. We were able to trail our stops up. We're essentially, if we get stopped out at 64.08, we'll take a small loss. It is what it is. Obviously, would you have liked to take the gain up here at 67 and actually show a gain? Of course. But the fact is, if we're taking small losses, we're in good position to benefit from the big winners. All right, a couple stocks on the weekly watch list. Schwab breaking out. All right, you guys want to take this trade, and you're more than welcome to. Pointing it out for you there. Nice breakout here. I would still be setting my stop probably down here under this 27.14 level. If you wanted to be a little bit more aggressive, you could set it 27.25. If you want to be very, very aggressive, which is not me, you could set your stop here around this $28 level. EMC, really just consolidating. This is similar to what I was talking about in a couple of our positions, how I wanted the stock to move sideways, allow that 50-day moving average to catch up. Look at what happened here on the 30th. This big bar, closed all the way up here at 29.88, and the 50-day moving average was down here at 27. In the time it's taken to consolidate, sure, it's been about a month, probably a little bit longer than a month, but the 50-day moving average has caught up. Now it's setting itself up. All right, there's a lot of support coming in this 29 area, and eventually a breakout over 30 allows you to put your stop nice and tight. Perfect setup. That's what you're looking for. Nice setups, especially when the market is being as strong as it is. You're looking for only the best setups out there. So that's why, like I said, if we get stopped out in H&R Block, if we get stopped out in EQR, that's fine, because the fact is I know there's plenty of setups that we can take that are setting up and are working in this environment. BK, Bank of New York Mellon, similar, just consolidating, so nothing to do on that one. Estee Lauder, okay, came in, now it's rolling over, probably going to test this 73 level, so let's see how it reacts down there. Starwood Hotels, consolidating nicely right below that breakout level. All right, so this is what kind of identified us to this trade over the weekend. So let's see if you can get that breakout and that close over, say, 85. All right, over 85, and then we have to see. I think your stop would still want to be down here at 78. That may be a little wide for you. If that's the case, you can probably set it here at 83, but again, that's being very aggressive. Home Depot up 0.36%, holding the bottom of that box that we identified. So you can see here, if say you were long and you had your stop here at 88 or 89, and you were using intraday stops and not closing prices, you would have been stopped out on this trade. All right, that's fine. After a run like this, that's absolutely fine. But now, if you weren't, you're still in the trade, and potentially you could watch this stock go up to $93 or $94. So closing prices for me makes my life a lot easier and keeps me from getting turned around. APC bouncing off bottom of the consolidation at the 105 level. Intel broke out last week. It's actually now back below the breakout and still waiting to break out over 35. And the last one, NOV, came back down, tested the $8 level, put in, this is called a hammer, all right, where it closed down. It moved down, ended up closing back above the open. All right, obviously if it was green, it would have been even better. But the fact that you have an open red candle at the bottom of a box very often is a reversal signal, especially after a move like this. You could potentially see this rally back to this 86.25 if that's your trade. And the last one we'll look at is LRCX, which is right below the resistance, 72.30. So not really a lot to do right now. The only one that you could possibly take is Schwab. We were able to identify a couple new potential stop areas in our existing trades. We have a couple that are close to being stopped out, EQR and H&R Block. Like I said, if that happens, it happens. Not a big deal. Don't sweat it. Take the loss and move on. All right, we have plenty of stocks that are working, and we have plenty of gains that we want to eventually lock in by letting those stocks work and trailing our stops higher. Guys, that's it for tonight. Please make sure to follow me on StockTwits, Twitter, Google+, and YouTube. You can also subscribe to the nightly recap, where I'll send the video links directly to your inbox, so you don't have to worry about missing anything. Have a great rest of the night, and we'll see you. Actually, there won't be an Anatomy of a Stock Trade tomorrow morning, so I'll have the strategy session out tomorrow night, and then we'll eventually have the weekend update on Saturday. All right. Have a great night, guys. Thanks for watching.